So I don't know if you've ever seen TV, stuff going across the bottom, like this. Do you know what that means? Any of it? There's different versions. What would you say it means? What tells you things are going down? On the scrolling at the bottom, right? The ticker, it's called. Okay. Yeah, and that's sort of a simpler version, but there's different versions of the way that's displayed. Okay, and that is information that, I mean, this ticker's been around for like 120 years. It used to just come out on a piece of paper with a telegraph line, and they, you know, and it would come with some delayed information back then, but you could get an idea of what stocks were doing. Do you know the Dow Jones Industrial Average is? So that's a stock ticker, and we're going to learn how to read that in this lesson. But they also refer to the Dow Jones Industrial Average. Anybody ever heard of that term? Okay. So there are millions of stocks out there in the stock market, right? And it's hard to analyze all of them at the same time. But what people have done is they put together what's called indices or indexes, plural, right? Let me clear this out of here. We'll talk about that real quick. Since 85 stock market ticker. Why is it doing that? Stock market ticker. So in your book, they describe the Dow Jones Industrial Average. What is that? The Dow Jones Industrial Average. Huh? Remember we talked about sentences where they end? There we go. So it's 30 large, what they call blue chip companies. Okay, 30 blue chip companies. And by blue chip, they mean that generally over time always been reliable, right? Stocks that generally, for the most part, go up year after year, right? There's very little risk in them. They've been around a long time, and they're called blue chips. In fact, IBM is one of them, and I don't know if any of you have ever heard IBM referred to as Big Blue. Why? Because they've been around forever, and their stock values generally don't fall. Okay, dips here and there, right? But the trend is upwards. And they're reliable. Okay. Now the Dow Jones Industrial Average. It says it's the average of 30 company stocks. Does anybody know what the Dow is? The average is currently. It's insanely high. 34,000. What's the Dow? I think they may even have it. Let's take a look here. Oh, that wasn't one. Well, they don't have it there. Somebody look it up. Look up the Dow on your phone. Well, I'm going to make an exception. She's going to do it, and the rest of you just look up the Dow. See what the Dow's at right now. So they added up the 30 stocks in the Dow Jones Industrial Average, right? Because you're not going to take a look at all the stocks on the planet, right? But so they had these averages. The Dow is one of them to get a sense of what the market is doing. And divided by 30, we got about 34,400. Does that make sense? Yeah. Like today, $34,400 as an average. What are some of the stocks in the Dow? Like IBM. IBM. Oh, I keep hitting the wrong one. IBM. Let me. This is in this particular. It's different for different averages. The S&P uses different things, right? But the Dow, like it's been around. That average has been around for 130 years, and they pick the biggest, most reliable companies, right? Take an average of. Hang on, let me just pull up.
That's a big number.
Oh, I am, jeez. Beat down. International Business Machines. So right now, it's $146 a share. But the Dow said 34,000. What's another in there? The Microsoft is in there. MSFT is their ticker symbol. $247. And on and on. Do you see none? There's no shares out there worth 34,000 like the average. So where did that come from? And we'll get into the details of that later. But what happens is sometimes a company, when their shares start to climb, they do a stock split. So real quick, if a company has issued 100 shares of stock, right? And the stocks of each one of those is worth $10, right? And then the price climbs, so people can buy it at $10, right? And then they do so well that the price of the value of the stock climbs to $50, right? So, okay, fewer people can afford a $50 share, right? And so that reduces the demand for the shares, right? And so what they do is they take the 100 shares and they split it into like a 2-for-1, 200 shares. So everyone that has one share now gets 2 shares of that stock, and they're both worth half as much, 25 and 25. You get it? So now their shares only cost 25 on the market, where people can afford to buy 81 of them, and the demand goes up. You see what I mean? So over time, these companies will have split their stocks over the last 100 years like that. And we'll get into more details of that later. But what the Dow doesn't take into account are those stock splits, right? So this is 34,000 without accounting for the stock splits. That would have reduced the value of each one. Does that make sense? Okay? So if you're ever looking at that and wondering, well, how can that be an average of those companies when none of them are anywhere close to that? That's why. Over the last 100 some odd years, they don't take into account the stock splits for this average. Okay? But the Dow is not the best average for the market. If you want to know what the market is doing in general, I don't know if the book had it in there, the S&P 500, okay? So the S&P, that's like the standard. Is that in your book? This new version, I can't even remember.
S&P.
S&P, so it's Standard & Poor's 500, okay? Now these are an average of 500 what are called large cap stocks. They're capitalized with at least $1 billion in assets. Okay, never mind that right now. But so this is really what the real, like when we do calculate, if we're ever going to do calculations about one stock as compared to how is it doing compared to the market, well, we need a number for the market, and the S&P 500 is the one that most people use. Okay, this is more of the real indicator of the market and what it's doing in general. Right? And it accounts for about 2/3 of the market. 2/3 of the market capitalization. That's the money involved in assets. Okay? Value of those 500 stocks, right? And it took hundreds of thousands of stocks, right? Millions. But these 500 are the large caps, and they account for about 2/3 of the value of the market all of them together. Okay? And this is the one that people compare things against. I mean, if you turn on the TV or the news, everyone's talking about the Dow this, the Dow that. That's interesting in a not really important way. So when you're doing calculations, you use the value of the S&P 500. Then there's other ones, just like the Russell 2000. That's 2,000 small cap stocks, right? Could be used to compare different things, right? But let's take a look at the tickers, okay? What do these tickers mean? Here's an example. What we saw going across the screen. Double check that. So our tickers, I'll give you an example. We'll do Microsoft. I have this one here. So if you see this going across the bottom of the screen, MSFT, and every company has an abbreviation called a ticker symbol, okay? And you can look them up on Yahoo Finance. Microsoft is MSFT, right? if you see that, and then you see 35K at, I have here 325.19, like this, and then an arrow, like a triangular shaped arrow pointing downwards, and then some number after it. Okay, so I'll tell you what this means. First of all, it's Microsoft stock, okay? And the 35K, right? That means 35,000 shares were just traded of Microsoft, okay? Somebody bought and sold to someone else, 35,000 of them, okay? So this will be like the last trade during the day that just happened, okay? So this means that 35,000 shares of Microsoft, okay, traded, right, at a value of $325.19 a share, right? Traded at, this is 325.19, okay? And that trade value of 325.19 per share, see that down arrow? That is down 3 cents, and this is important, from the previous close, not the last trade, from the previous close, like the day before. Okay, it's not from trade to trade, right? You kind of get the idea there? So that ticker tells you quite a bit. It tells you it was Microsoft. Somebody just traded 35,000 of their shares on the market at that price. Like somebody sold it for that and someone else bought it for that price per share. That's a lot of money, right? 35,000 times all that. You got to have money to be in this game, right? And that particular trade was 3 cents less than what it closed at the day before. Does that make sense? Yeah.
How does the company make money by that?
Microsoft?
Because like, let's say I buy stock for $10 and it went up and I can sell it for 50. I get the $50.
That's right. Yes, you do.
But how do they make the money?
They make it, and that's not a bad question. They are indirectly making money because if there's a demand and people are purchasing, the value of that goes up. They're not making cash money. So they also hold some of their own shares. And when they're being bought, for the most part, the price is going up. And so that is an asset on their balance sheet, just like the, their plant and equipment and vehicle fleet has a value. Their stocks that they hold have a value, and so that asset goes up. Not necessarily cash, right? So they end up with a higher net worth. Now, where do they get the cash initially? Not from your trade on the open market. So there's a difference between the trade and the open market. And yesterday I talked about the IPO, the initial public offering. When the company first issues the stock for sale from them, new issues of stock, people buy those, that cash goes into the company. And that's where they use it to, develop the business a little bit more with a project that they need, right, that kind of thing. But after that, all the buying and after that initial public offering, all the buying and selling on the open market, that money goes between people who are not Microsoft, right? And so that has, and so that's the draw to the initial public offering. It's going to, a stock that's going to have some value to you later on, right? Hopefully. Does that answer your question?
Yes.
Okay. So when you're trading and right, that trade is on the open market. Microsoft doesn't get that cash. Now they may get a bump in value of the asset that they own because they own some of those shares, obviously, right? So okay. So let's take a look at example 1 then. All right, what's going on in example 1? Marcy is following the stock market ticker across the bottom of the TV screen. Okay, she purchased some shares of Visa, right? The stock symbol, the ticker symbol for Visa is just a capital V, okay? Last week, she's interested in if there are any current trades, right? So she knows that as ticker symbol B, she saw the following information. B, 12K, B, 12K at 72.73. And this arrow here, this doesn't color very well, 0.12, or leading 0. So what does that tell about Visa? What happened? 12,000 shares of Visa. Well, we're going to say trade because they were sold, but that means somebody bought them, right? So bought and sold, that's a trade. Okay. So this means that 12,000 shares of Visa just traded for $72.73 per share, or per share. And this is what? It's what? Up 12 cents from the previous trade? No. Yes, from the day before, right? From previous close. Okay? 12,000 shares of Visa traded for that amount, up 12 cents from the previous close. Okay? Kind of getting the idea there? So let's have you guys take a look at the check for this then. See if you understand that. So read that check over, if you would. GE and this ticker symbol. This ticker entry. So GE at 22K. 2940. What would you say that means? You want to take a stab at that? Anybody? Oh, okay. Give you a second to write. All right, what does it mean?
22,000 shares of General Electric just traded for 29.40 per share down.
From?
From previous one.
Right, that's important, okay? Just traded at 29.40 per share. And that was down how much?
25 cents.
It's 50 cents. It just is put the 0 at the end there, right? That's $0.5, right? That is down 50 cents from previous close. Okay, except about with the rest of you had, except for the 50 cents. So whatever that is, that's in dollars at the end, up or down. Okay. What does the check having this do? Yeah, or the extent. Let's look at the extent real quick. And the trading price of GE been at 30.05. What would have appeared after this? So we got to think about this a little bit. Had it been 30.05, what would have come after the up-down symbol? Or was it an up-down symbol? What do we need to know? And also, what do we need to know regarding that up or down arrow? The previous close. So how do we know? Like, if they're saying it's 30, what is it supposed to be now? 30.05, how do we know what should go after that? Because we don't know the previous close, do we? Aha. That was the trade, and that value was 50 cents less than the previous close. So we can find the previous close, can't we? So the previous close was that plus 50 cents, right? Which is 29.90. Right? So that's our previous close. But now they're saying, well, what if the trade was at 30.05? New minus old, right? So how do we figure out what comes after the arrow? Minus that, right? Or new minus old. Whoopsie daisy, sorry. Come on, erase. I did old minus new. I'm not that smart. 29.90. The difference between that and the previous close, or that is the previous, in the trade. Oh my goodness, Mr. Hefner. Oh, sometimes these 6 weeks, you just blast everything in here. Oh, why don't we do 30.05? The way it's doing it first, right? That minus. So 30.05, and I'll erase. I am, yes, it's all minus 29.90 gives us what? .115 positive, right? So that would be the up arrow symbol, right? 0.15, 15 cents higher than the actual trade value. Okay? So you kind of had to work this one from the inside out. You had to find the previous day's close, right? To say what would come after the up or down arrow. That is based on the previous day's close. Right? Let's take a peek at example 2. Let's bring this down a little bit here. So example 2, what's going on in there? We got there Tom needed money for graduate school tuition. He called his broker. Broker is a person who executes trades for you, by the way. If you don't want to do it yourself online, you can have a broker that works on commission, right? You don't want to buy somebody's share or sell somebody's share, right? And they'll do it for you. Ask them to sell 3,000 of this Coca-Cola. KO is the ticker symbol for that. On Wednesday, as soon as the trading price hit 44 per share, okay? So we knew it closed at 44.25 on Tuesday. How would that appear? So when it gets to 44 per share, what will the ticker symbol look like? Start out with the company, right? KO. And what would come after that? 3K, right? To be traded at what? 44. Okay. Will that be up or down from the previous day's close? Down how much? Yeah, simple as that. So when the ticker symbol looks like this, right, that's when he wants to sell. I guess he's thinking it's not going to get above that, right? During the day, and he really wants his money, so he's going to take a little loss, right? Or get his cash out. So that's where the good go. Okay? Any questions on that one? Let's do the check with that. Read that over. What would the previous day's close be? Previous day's close. One share if the ticker had read 3K 44 up 25. Okay. Instead of down 25. What would we do here? It traded at 40. They want to know what was the previous day's close. That, right? If it was up 25 cents to get to 44, yeah, right? So you'd do 44 minus 0.25, and you should get 43.75 would be the previous close. Okay? So you kind of go the opposite way to this. There. Any questions on that? Okay. And we kind of touched on this next thing, but the total value of a trade. These ticker symbols have the value of each individual share, right? So you can probably guess the total value of the trade would be to do what? Huh? Yeah, the number, right. Value of a trade. Okay? So it's the price per share of the trade, right? And the number of so it'll be the number of shares traded, number of shares traded times the price per share, or the trade price. Okay? Total value of the trade. And I think these would be pretty simple to go and figure out. Of course, you might want your calculator. Right? Oh, quick example for this is not hard. Example 3. Somebody purchased 15,000 shares of stock Target at $78.43 per share. And her trade price is TDT 15K at $78.43, down 17 cents. You don't even need all that, right? What's the total value of her share? What are we going to do here? Times 78.43, right? Okay. And we end up with 1,176,450. Right? You say she bought it, she purchased. So she had a cough up 1,176,000. Oh, maybe she didn't have that in cash. Maybe she had that in some other equity that she sold and was able to buy this too. Who knows? Right? Let's look at the check for that one. So below there, suppose Tony made a purchase at the previous day's close. Now they gave us that ticker information, right? What would have been the difference between the values of the trades? Well, what do we need to find? The previous day's close, right? And it said it was down 17, right? So we take our, whatever it was, it went down to get to here. To see what it was, we got to do what? Add 17 cents, right? Which gives us what? 78.60, right? So that's our previous close. Okay? I forgot to even ask. Oh, yeah. What will be the difference in the trades then? We're going to find 15,000 times what? Times this guy. Somebody tell me what you get there. So 1.179 million. Got it? Sure. That's the other one. So what would be the difference, right? So what do we do?
Now we subtract.
So take that 1179 minus the 1176 450, right? You can end up with 2550, right? Oh, we put the comma in the wrong place. We'll fix that. 250. All right. So get a little bit more money. Let's do that trade then. Yeah. No. Compared to the overall value, what's the difference, right?
Yeah.
From a grand, scheme million, more than millions, right? Okay. Let's do this here. I'm gonna do. We might skip the daily money flow stuff. Trading volume, let's see, do I want to do this? Yeah, let's be able to go back and forth. So take a look at trade volume there, 496. Read that, take a second and read that. We're using numbers like K, or letters like K and M. M would be millions, K would be thousands, right? Last one for this, example 4. So Grandpa Rich left 3 grandchildren, who cares what their names are? 87,500 shares of Apple, AAPL, ticker symbol. Grandchildren sold all the shares, right? Sold 87,500 shares at $96.91 on Friday. The closing price on Thursday, previous close, how would the ticker symbol look? So let's write that down. So the ticker symbol for Apple is what?
AAPL.
Okay. And what comes after that for this particular trade? $87.5K. Convenient, right? We're not in the millions order yet. 5K at how much? 96.91, right? Now, was this up or down from the previous close? Up. How much? Could calculate it, right, I guess, but how much? They have it there. 2.08. Right? So that's where, we use the K, and then what I really want to get to is the check, okay? So take a look at the check there. It wants to express 0.15 M as what? 0.15 M is for millions, right? So really what you need to do is get the actual number. What would the actual number for 0.15 M look like? Yeah, right? Anything over here would be 1 full million, but we don't have that, right? So now we're at 150,000, right? And then they want that as K. So what would that be with the K? 150K. So you see how you do that? If you see anything like that on your homework, right? I would recommend, you could like add and subtract the zeros in your head and try and do it, but we'll make an error. Just get the actual number and then rewrite it as K. If you want. That makes sense?
Yeah.
Okay? All right, yeah, we're going to pass on the customized tickers, I think. And in that review, like if any of the review problems have something to do with that, let me know and we'll take that off. I think it's enough of that for now. So does anybody have any questions on the tickers?